adjusted gross income. This is where banks use, like if you went to apply for a loan or whatever the case is, a mortgage, they always say, well, what is your adjusted gross income? So let's just say that you make $100,000 a year. Again, hypothetically, this is for example purposes. Let's say that you make $100,000 a year. That's your adjusted gross income. The IRS says you don't have to pay taxes on the 100, because the IRS says, I'm going to let you take a standard deduction or an itemized deduction. Think of a standard deduction as cost of living, right? Like a cost of living deduction. If you're single or married filing separately, the IRS is going to give you a standard deduction of $14,600. If you're married filing jointly, they're going to give you a standard deduction of $29,000. If you file head of household, they're going to give you a standard deduction of $21,000. So you see this $21,900. Let's just say that for example purposes, that says $20,000. We're gonna make it an even number so people can kind of follow along easily. If you make $100,000, if your adjusted gross income is $100,000, the IRS says, I'm gonna give you a $20,000 deduction. So that way, whenever you make $100,000, I'm gonna subtract $20,000, so that way your taxable income is only $80,000. So yeah, you have an adjusted gross income of 100, but the IRS says with this standard deduction, you only have to pay taxes on 80. Now that seems okay, but that's not where wealthy people live. You can also take an itemized deduction, whichever is greater. So let's just say that you took an itemized deduction of $25,000. The IRS is going to let you take the 25 because the 25 is greater than the standard. Well, what type of itemized deduction are we talking about? Well, the IRS allows people to take what's called a charitable contribution deduction. The IRS says this: in most cases, the amount of charitable cash contributions taxpayers can deduct on a Schedule A as an itemized deduction is limited to a percentage, usually 60%, of the taxpayer's adjusted gross income. What does that mean? That means this: if you made $100,000 of adjusted gross income, the IRS is saying you can take $60,000, up to $60,000 as an itemized deduction, and donate it to charity. So that way, if you made $100,000, you donated 60, you only pay taxes on 40. Well, wealthy people still don't live in that space. When we keep reading, it says qualified contributions are not subject to this limitation. Individuals, that's you, may deduct qualified contributions of up to 100% of their adjusted gross income. In other words, remember when I told y'all, I need y'all to pay close attention. You remember when I told y'all the LLC is a business structure only allowed by state statute? That means that, guess what? The LLC can't even be anything that we talk about when it comes to federal taxes. So the IRS says you can take every dollar that you make and donate it to a qualified organization. What is a qualified organization? A qualified organization is a community chest, a corporation, a trust, a fund, or a foundation. The IRS says you can take 100% of every dollar that you make and donate it to a qualified organization, which is a nonprofit. And guess what? They never told you that you could not own the nonprofit. Message. Chew on that for just a second. This whole time you trying to tell somebody that filed your taxes, show that you took a loss. For what? For what? What you showing that your business lost money for? That don't help you. Just donate your money to charity. They never said you couldn't own it. You think every time that you see people donating money with a big white check, what you think? They just love people like that? Cut it out. Remember, I'm teaching you how to go get funded and never use your social, but I need to show you what each of these companies mean. Now, here's the other part of the internet, what they tell you. They tell you go open everything, go get an LLC, and go put everything in a trust. Now, you see, I ain't gonna tell y'all that a trust is bad, but you're missing something. I use this analogy all the time. See, I'm from Lafayette, Louisiana, southern Louisiana, not New Orleans. New Orleans don't cook like Lafayette, and I'm telling you that right now. No hating, but I'm just saying. I'm from a place called Lafayette, Louisiana. You know, one of the staples, one of the foods that you can go get in a southern Louisiana town is called gumbo. I don't know if you ever heard of it. See, gumbo ain't nothing but a soup. But you see, gumbo is the way that you started. The way that you started. I know Louisiana, people from New Orleans are gonna feel away, but y'all know what it is. I'm just saying, let's just call it Louisiana food. Let's just call it Louisiana food. I don't wanna offend nobody. But let's just say, whenever you're making gumbo, you know how it starts? Equal parts flour and equal parts oil. That's called the roux. You gotta make a roux. I don't care who you are. If you call yourself making a gumbo, but you don't have a roux, you ain't got no gumbo, you got water. And you see, most people don't know how to make a roux from scratch. I know people be cheating, they go buy the jar of roux. I've used a jar of roux before too when I didn't feel like it, but whenever you make that thing from scratch, they always tell you, you gotta cook it slow. You can't rush it. It's a process. So when people start talking about, well, just go get an LLC and go ahead and put it in a trust. No. You're missing something. You're missing a rule. You're missing the most important thing. I'm not telling y'all that a trust is bad, but your thought process of what a trust is and what's really happening is two different things. Because why? You know what a trust can't do? A trust cannot protect you against pre-existing debt. What does that mean? Let me give you another example. The American dream, to go buy a house. Hell, everybody tell you a house is an asset. That's a lie. The American dream, go buy a house. So you go buy a house. As a matter of fact, as soon as you bought your first home, you took a picture with the real estate agent with the little key, posted on social media, and everybody happy, right? Well, you know when that bank approved you for that loan, whether it be 100,000, 200,000, 600,000, 800,000, whenever the bank approved you for that loan, you know what the bank said? I'm going to allow you to get this loan, but I got to protect my asset. What do you mean? The bank put a lien on that house. I'm going to say it again. The bank put a lien on that house. Most people, I'm not saying that this is true, but most people believe that if they go get the LLC, purchase the property under the LLC, whatever the case is, put it in a trust, somehow if something happens to them, that house is going to be protected. Well, what happened to the lien? You just think that the lien gonna just like disappear? No, you're missing something. You're missing your roux. Well, what's the roux? Your holding company. Now, why is that such an important thing? Well, let me give you a history lesson real quick. Let me give you a history lesson. There's a company called Heinz Ketchup. Now, we all know the company, Heinz Ketchup. It's ketchup. See, look, it's ketchup. Heinz Ketchup. Heinz Ketchup was introduced in 1876. Remember that date, 1876. That's over 140 years ago. There are two facts, not guesses. There are two facts about Heinz Ketchup that you need to know. Number one, Heinz Ketchup is not an LLC. The first state to legally establish the limited liability company was in Wyoming in 1977. Now again, I'm not going to say use common sense. Let's just use logic for just a second. If Heinz Ketchup been doing something for over 140 years, but the LLC just came out less than 50 years ago, well, how did Heinz Ketchup make it so far? Maybe because they didn't want to limit their potential. My point being, Heinz Ketchup could never be an LLC. And yet, see how they made it 140 years. But the second thing, when I was talking about the trust and the rule and all of that, Heinz Ketchup is not owned by a trust. No. They've been around 140 years, and Heinz Ketchup is not even owned by a trust. There's companies like Geico Insurance, Westco Court, Hellsberg Diamonds, Star Furniture, Lubrizol, McLean, Duracell Batteries, NetJets, Heinz Ketchup, Fruit of the Loom, Dairy Queen, Brooks Brothers, Acme Bricks, Mytech. None of these companies are owned by a trust. All of these companies are owned by a company called Berkshire Hathaway. Berkshire Hathaway is a holding company owned by Warren Buffett. Sometimes our biggest mistakes is we don't follow the leader. I ain't saying you got to like the man, but the man is a billionaire. He clearly knows what he's doing. So I'm not telling you that a trust is bad. Here's the recipe. You go have a holding company. And here's the crazy part. You ready? Watch this. Not just any type of holding company. Well, not just a company that's open anyway. Watch this. Wyoming does not have either an individual income tax or a corporate income tax. You see, whenever you open a holding company in Wyoming, let me show you the recipe. You have your holding company own all of your assets, and then you place your holding company in an irrevocable trust. Thank me later. That's the purpose of a holding company. Remember, I'm going to teach y'all how to go get funding and never use your social, but I need to show you the type of companies that you need to open. Again, your nonprofit, you still ain't paid taxes. Your holding company controls all of your assets, and your holding company sits in a state that doesn't have taxes. You let your holding company be placed in a trust after your holding company holds all your assets. Again, holding company owns all of your assets, then you place your holding company in an irrevocable trust. Own nothing, control everything. This is where I'm going. All right? You got a nonprofit that you donate to, you don't pay taxes. You got a holding company that owns all of your assets, you still ain't pay no taxes. And when you open your holding company in a state like Wyoming, guess what? It conceals the identity of the people who own it. It does. Your name will not be listed at the Secretary of State. How somebody gonna sue you for something if they don't know that you own it? I'm coming. The next thing that you want to do. The next thing that you want to do. Again, we're talking about building a legacy. We're talking about building a legacy. We got a nonprofit. We got a holding company. The next thing that you want a real estate investment company. Why? Let me show you. Now, I want y'all to look at the screen. Don't y'all move your eyes off the screen. Hear my voice, but don't move your eyes off the screen. Do you know how many people in real estate right now that will tell you Don't ever purchase investment property underneath your name. Make sure you purchase all of your investment properties underneath a LLC. Now look at this. Now y'all heard me say, don't purchase real estate under your name. Purchase real estate underneath a LLC, but yet you're looking at a paper that has your name on it. Where that makes sense, Joe? Think about this for a second now. People are telling you don't go purchase real estate in your name, put it underneath the LLC as if your name not attached. What I am going to tell you, purchase all of your real estate underneath a corporation, but not just any type of corporation. You want to purchase all of your real estate underneath a real estate investment trust. A real estate investment trust is a company that owns, operates, or finances income producing real estate. Stop. That means you open up a corporation. Hold on. Don't take my word for it. Make me prove it to you. Now, I know some of you are going to try to do this yourself. I know it. Y'all can't help yourself, but I get it. Watch this. I'm going to go get an EIN number. I'm going to begin the application. You see, when I select corporation, it allows me to choose a real estate investment trust. Why am I telling you? A real estate investment trust is a company that owns, operates, or finances income producing real estate. It's a property management company. That's it. Don't even think about it. It's a property management company. Why would I tell you to go open real estate underneath a property management company that's structured as a C Corp? Because a real estate investment trust is legally required to distribute at least 90% of its taxable income to its shareholders in the form of a dividend. Dwayne, what in the world did you just say? I told you that if you purchase your property underneath a real estate investment trust, 90% of the taxable income has to be paid back to the majority shareholder, which is your holding company. You still ain't paid taxes. What do you do with the other 10%? Expense it. So you got all this property, still ain't paid taxes. You're welcome. Hold, please. I'm going to show y'all how to go get funding. I'm just giving y'all just some nuggets real quick to chew on. You see, you know why you would never know this information? Hear me closely. And this is not a jab, but this is reality. You know why you never knew this information? Because you had yourself stuck to a limited liability company. I'm going to say it again. You chose to associate yourself with a structure that had limitations. Whose fault is that? I gotta pause. I have to. This is a mindset. I gotta pause. I gotta pause. I gotta pause. I gotta pause. Now watch this. I'm coming. Now I ain't got hype. I'm coming. I'm coming. I'm coming. Let me show you how words have meaning and words have power. Let me show you how words have meaning and words have power. Watch this. If you ever use the word write-off, if you've ever used the word write-off, people say it all the time. I can write this off. I can write that off. Dwayne, can I write this? If you've ever used the word write-off, put a 1 in the chat. If you ever used the word write-off, put a 1 in the chat. Simple question. Thank you for your response. Second question. If you consider yourself a small business owner, put a 2 in the chat. If you consider yourself a small business owner, put a 2 in the chat. I'm about to change your life. Just like that. You ready? Watch. Watch. If you go look at a tax return right now, because everybody tell you to write this off on your taxes. If you go look at a tax return, you will never, ever, ever find the word write-off. You will never find the word write-off. But yet you still use it. You still use the word. There's not even that word on a tax return. Did you ever go look at the definition of the word? Write-off. Dismiss someone or something as insignificant. Cancel the record of a bad debt. Acknowledge the loss of or failure to recover an asset. Write-off and charge-off are nearly the same thing. I ask you, do you consider yourself a small business owner? Most of you all without hesitation said yes. The definition of the word small is of a size less than normal or usual, insignificant or unimportant. But it's amazing how the word write-off and small has insignificant in the meaning. The definition of insignificant. You low-key are telling yourself that you are too small or unimportant to be worth consideration. And oftentimes, when people give you the keys to change your life, your natural response is to give them an excuse on why you can't. And I had to show this to you because just like somebody made in a comment, whenever you go open a REIT, you have to have 100 shareholders. You see, the problem is most people don't understand the difference between a public and a private company. The same rules that apply for public companies don't apply for private companies. My point is that there's everybody in their mama that's going to tell you don't do this and don't do that. The next time that somebody told you to do this and do that, ask him to show you the receipts. Just ask people to show you the receipts. If they believe in it, show it to you. That's it. Because we all went to school. We all learned how to read. Let them show it to you. Moving on. Why do you want a nonprofit so you don't pay taxes? Why do you want a holding company to hold all your assets? Why do you want a real estate investment trust? It's a property management company. The next thing that you need to do is you need to open a parent company. Now let me explain. People confuse this, and I'm going to show y'all this real quick. You're always going to need one nonprofit. You're always going to use one holding. You're always going to use one property management company. But you see, whenever you have an operating company, this is what you do every day. Your parent company is your corporate office. So let's just say that you drive trucks. Your trucking company would have a corporate office. Let's just say you sell lemonade. Your lemonade wouldn't have the same corporate office as your trucking company. So you can have multiple operating companies, and the parent company, i.e. corporate office, will always align with the industry. So if you operated in different industries, you have to have different corporate offices. But all of those companies will always have one property management company. You're going to always have one holding company. Again, Berkshire Hathaway Incorporated. Insurance. Right? Finance. Manufacturing. They're all in different verticals by industry, but only one holding company. So the reason why I say you need a corporate office, look at it like this. Let's take FedEx. Most people believe that FedEx is made up of one big company, and that's not a true statement. FedEx is not one big company. FedEx is made up of multiple companies. FedEx is made up of multiple companies. FedEx Freight, FedEx Office, FedEx DataWorks, Custom Critical, they all have one corporate office because they all in the same field. Now, this is where I'm about to teach you the funding strategy through Stripe. For example, and this is only for the new people. If you've never heard me speak before, I only want new people to respond. If you walked into a FedEx office right now, and you paid FedEx $100, you walked into a FedEx office and gave them people $100 bill to ship a package from one state to the next, how much money you think FedEx made? If you walked into there and you gave them $100 bill, how much money do you think FedEx made? $100, $190, $80, $70. Okay, cool. Guess what? I'm about to give y'all a nugget. It's going to hit y'all fast. FedEx made $400. And I know you're asking yourself, how is that possible? Out of my pocket came $100. How did they make $400? Let me show you. You walked in and gave FedEx office $100 to ship a package from one state to the next. FedEx paid FedEx Logistics $100 to coordinate that delivery. FedEx Logistics hired FedEx Freight to drop it from one state to the next, $100. FedEx Freight paid Federal Express Ground $100 to deliver it to your house. When you gave them $100, they hired all of their companies for the same $100 to show that FedEx made $400. Why? Because there's a term in business called a business-to-business transaction. Is a commercial exchange of goods, services, or information between two businesses. So when FedEx learned the power of doing business with itself, FedEx knew that if they can show their cash flow, that's how they're going to get funding. A bank always asks to see your cash flow. The definition of cash flow is the amount of money being transferred into and out of a business. Stripe says that they're going to fund you based on payments processed. Stripe ain't never said that they would fund you off of profit. They said that they will fund you off of how much payments are processed. So if FedEx can take 100 and turn it into 400, well, why can't you do the same thing? Here's your way to go get funding. Let's just say that you sold lemonade on the weekends. The name of your company is ABC Lemonade. You don't own that name. Your corporate office owns that name. Your corporate office has an address that's owned by the property management company. It pays rent. Your property management company pays a holding company to hold its assets. If you took $1,000 cash money right now and you went deposit that into your operating company account, your operating company has $1,000 in the bank. 1 week later, your operating company receives an invoice from the corporate office for $1,000. Why? Your corporate office say you have to pay me to use that name. So you pay the invoice. Stripe processes that payment. The $1,000 that you deposited is now sitting in that bank account. Your corporate office receives an email 1 week later. It's time to pay rent. Your property management sends an email for $1,000 For rent, your corporate office pays the rent. Stripe processes the payment. And now the same $1,000 that you deposited here is sitting right there. The holding company sends an invoice for $1,000 for holding the assets. You make the payment. Stripe processes it. That same $1,000 that you deposited is now sitting way up there. You showed how $1,000 ended up in all 4 companies' bank accounts. Well, let's just say that you did that 5 times in 1 month. You did that same transaction 5 times in 1 month. Now, each company shows that it processed $5,000. Stripe says process payments for 3 months, not a problem. Month 1, $5,000. Month 2, $5,000. Month 3, $5,000. You've processed a total of $15,000 according to Stripe's database. Stripe is going to give you a loan for half of what you processed. $15,000 divided by 2. That means you qualify for a loan of $7,500. How many companies do you have? 4. $7,500 times 4 is $30,000. You took $1,000 and turned it into a $30,000 loan. They never asked you for your credit. They never asked you for a tax return. They never asked you for anything. What qualifies me to tell you that? Easy. First loan I got, May 28th of last year. Second loan, June. Third loan, October. Fourth loan, November. Fifth loan, again, November. Sixth loan, February. Seventh loan, March. Eighth loan, April. I've gotten over $560,000. They never checked my credit one time. Show me a bank right now where you can go get $500,000 and they never check your credit. I'll wait. I'll wait. Show me a bank right now that you can go get $500,000, no credit check. Somebody say, what is the interest on these loans? I always think that that's an interesting question. Great question. They don't charge any interest. They charge a flat fee. I'm going to explain. I'm going to show it to you. Let's read it together and then I'm going to show it to you. How Stripe Capital works. Stripe Capital offers financing for eligible users processing payments through Stripe. Under the Stripe Capital program, business financing doesn't have late fees, early payment fees, or origination fees. Instead, the total amount you pay in advance plus a flat fee. Let me explain. I'm going to show you how they work. Capital. Where am I at? Hold on. For example, I'm going to give you 2 examples. One of the loans that I got, a loan that I got for $87,000, they charged me a fixed fee of $17,000 to get it. Now, watch this. On the last loan that I got for $32,000, they charged me a fixed fee of $5,000. Now, somebody say, what's the repayment rate? You see how the repayment rate says 20% for this $32,000 and 10% for this $87,000? What does that mean? Let me explain. First of all, in order for you to get a loan from Stripe, well, whenever you get a loan from Stripe, Stripe is going to let you pay every 2 months. This is the minimum you must reach every 60 days. If you have not reached the minimum through your sales by the end of each period, we will automatically deduct the remainder. So what does that mean? How do you pay the loan back? First of all, they're going to let you pay back every 2 months. But what they're going to do is they're going to take 10.5% per transaction, which means this is the percentage of each transaction that is used to pay back the loan automatically. So if a customer pays you $100, they're going to take 10.5% of that $100 and apply it to your loan that's due every 2 months. Let's just say that after 2 months, you only collect $10,000. On the 61st day, they're going to debit your account $1,627. Now, let me explain. And I want you to understand. I need to explain this because I think a lot of times people get it confused. I'm not saying that Stripe is an SBA loan. Stripe is a loan that you use as leverage. The whole purpose of these loans is to help put money in your pocket sooner rather than later. Now, naturally, you should have a business with customers. I can show you how to get the money by just using your business transactions. But the whole key is what happens when you get the money. This is the difference between the people who understand it and the people who are only looking for quick cash. You see, whenever Stripe gives you a loan, you're supposed to take half of that money and leave it in your bank account. So let's just say Stripe gives you $100,000. You don't have $100,000. Even though your bank account says $100,000, you don't have $100,000. You're going to take $50,000, leave it in the bank. Let Stripe take their money every 2 months. You're using their money to pay them back. Whenever you take half of a loan that anybody gives you, that's generally 18 to 24 months of payments. You just secured yourself for 18 to 24 months and you ain't got to worry about the payment because you took half of their money and paid them back. You take the other half and reinvest it back into your business. That's how you grow and scale. That's how you grow and scale. You ain't ever got to come out of your pocket. So now, if you just open the business, you're just starting a business, this is ways for you to get money because a regular banker ain't going to give you the money. This is ways to get you the money. You do this for 1 to 2 years. Now, guess what happens? And I need y'all to pay close attention because I'm going to show you. And I cannot make this up. Hold, please. Hold on. Because now, when people start to, combat me with this, hold on. And I need y'all to hear me. I need y'all to hear me on this one. I need y'all to hear me. Hold on. Please hold on. I'm about to give y'all a nugget. Most people may not get it. I'm going to give it to y'all anyway. I want y'all to listen. And I'm showing you we don't chase bags, we chase leverage. And I'm about to prove it to you. Hold on. I have to show y'all this. I have to show y'all this. And this isn't for flex. This isn't for cap. But I'm showing you what happens when you use this strategy the right way. Watch. Where to start? All right. When you use the strategy the right way, here's what happens. Let's go to work. Watch this. When you apply for financing through Stripe Capital, Stripe might obtain your business's credit history through the Small Business Financial Exchange. Small Business Financial Exchange. That is your Experian business credit report. Additionally, Stripe may report performance of your payment history to to the Small Business Financial Exchange. So whenever you get these loans from Stripe, Stripe reports your payment history to your business credit. For instance, I showed you that $87,000 loan. Here's my business credit report. Watch this. This is through Experian. Whenever I scroll down, what does it say? Small Business Financial Exchange trades, details. That shows everything that I have. This is Stripe reporting. So when people talk about building business credit, that Quill, Granger, and all of that stuff, that's net 30 accounts. Whenever your business credit can show that you have term loans, whenever you can show that you have term loans that you have paid on time, what's going to happen? Let's just hypothetically say that you want to go purchase a vehicle in the company name. Hold, please. In the company name, I need y'all to watch this video. I got 2 videos on it, but hold on. I need y'all to watch it, please. I need y'all to watch this video. Where is it at? Look. Come with me as I show you how I purchased a 2025 Cadillac Escalade with no credit check using a C corporation and never having to give my social security number one time. Yesterday, my day started out where I had to fill out a business credit application with Bayway Cadillac of the Woodlands on yesterday. I spoke to my salesperson, Johnny Criswell, and Johnny sent me over the application. And he said, Dwayne, make sure that you start the application by telling them that you want to apply for the loan in just your business name only. So here you will see that I am entering in my business name only. And at this moment, right, you want to make sure that you're listing the business name exactly how it is on the Secretary of State's database. You want to make sure that that information matches perfectly. So basically, I went ahead and I went and get a brand new 2025 Cadillac Escalade. 2020, look, I'm going to show it to you right here. Brand new 2025 Escalade.
People actually open a business from...
Then people never checked my credit one time.
And
they went straight off of my Experian to show that I have term loans. Brand new truck. Never checked my credit one time. So you get the loan to put money in your pocket. You pay the loan back. Build your business credit. Go get a car in your name. I mean, in the company name. And it ain't just me. Hold, please. Let me show you other receipts. Hold on. Let me show you other receipts. It ain't just me. It ain't just me. Because I know sometimes people think, well, Dwayne, do you have other people that did it? Hold, please. Hold on. Hold on. I'm coming. Where is it at? Voila. Here we go. Let's read it together. This is people in my community. This is people in my community. 11 days ago. 11 days ago. Hello, everyone. I just want to share some of my legacy building progress with you all. And for someone who may be starting from the beginning like I was, my husband and I have always talked about starting a business for 5 to 6 years, but never took the step out on faith. That was until I came across Dwayne's Live around March of last year. I listened and researched because I have never owned a business. The only experience I thought I had was being in management positions in other people's businesses. I've heard all the talk about LLCs from people I know, but something about the way that Dwayne explained the C Corp and the limitless possibilities triggered something in me to trust the process and purchase the Legacy Builder. Let me tell you, I was beyond scared, but I refused to let that stop me. My operating company was open in August of 2024, and my life has been changing ever since. I left my 9-to-5 and gave this business 1,000%. And by following the journey to success, as he teaches and taking action with the knowledge, I was able to purchase my first commercial equipment a week later. And a week later, I got my vehicle in the business name. I don't know if they judge a book by its cover or not, but if they do, you want yours to be a C corporation. It hits differently. Her and her husband opened they have a landscaping company. They bought a 0-turn lawnmower in just a company name, and they bought a brand new truck. GM Financial. They name nowhere on that paper. I can give y'all testimonies all day. I can pull them up all day. What you thought about that LLC, it hits differently when you have a corporation. No, what she did was started my process in August. The company got open in August of 2024. The first purchase that she tried to make was the lawnmower. She got it. A week later, she tried for the truck. Got it. All day long. I live through these corporations. Ladies and gentlemen, my name is Dwayne Williams. I sit in the CEO chair of Mac Enterprise Consulting. There are 3 ways that I can help change your life. This ain't for everybody. I already get it. Some people already doubting it, and I understand. But for those who heard everything that I said, for those who were paying attention, you did not come across my life by accident. It is what it is. I only have one YouTube. I only have one TikTok. I don't do messages and DMs. If you want me to help you, there are a number of ways that I can help you. And I'm going to take my time. I just need y'all to give me 10 more minutes, and I promise I will answer any question that you have. Give me 10 more minutes, and I'm going to give y'all, the link is in my bio. If you give me 10 minutes of your time, I promise. After that, you can ask me any questions. If you need me to help you, there are a number of ways that I can help you. Let me start with what most people have a fear with, which is money. Number one, if you don't have any money, I have free resources that I can help you. You can take a free business assessment, and on my website, you can get a free business plan guide. You're going to have a pop-up that says unlock your free business plan guide. So for the person who says, I don't have any money, well, there you go. I have free resources for you. You can get a free business assessment or a business plan guide. But if you want to learn this stuff and you understand that it's going to take an investment, I have a masterclass. I have a masterclass that walks you through what I call the journey to success. What is the journey to success? That is where I walk you through how to write a business plan. Why is it important for your business to have its own identity? Registering the business, the purpose of branding your business the right way, how to build credit, the importance of bookkeeping, registering your business with a Better Business Bureau, having insurance for your company, having a trademark, set up a trust. These are the 8 things that every business owner should do before they take money from a company. But here's the problem, right? Most of you all will say, well, Dwayne, I already have all of this stuff. No, your LLC has all of that stuff that's connected to you. I show people how to walk this journey using a corporation, how to remove themselves from the picture and have everything underneath a corporation. This is what this masterclass is for. It's a lifetime access class. You have access to this class for a lifetime. Read the reviews. We have over 100 5-star Google reviews. Go read them. And when you take the class, we give you a book that gives you the step-by-step play. How to build your business the right way. How to write a business plan. How to build business credit in less than 90 days. The Business Lender's Guide. There's a guy by the name of I Am King of Credit. He teaches people how to repair their credit. He gives you his ebook on how to repair the credit, the Black's Law Dictionary. And for most people, the guy who allowed me to add this to my masterclass, I asked him, I said, well, man, if people purchase this masterclass, do you want me to give you anything? I can. He never asked me for $1. He doesn't want me. Even if I tried to pay him, he wouldn't take the money because he sees the value of trying to help people. Lifetime access, masterclass. This is your foundation. This is the foundation that you need. The masterclass is $4.99, but Crystal, can you put it in there? We have a discount code for anybody who's interested. If you enroll now, add the discount code Momentum, and I'm going to give you $200 off. This is all the stuff that you never learned in school. Use the discount code Momentum. This is all the stuff that nobody ever taught you. It's 6 classes plus ebooks. These are all the things that nobody taught you. And I tell people this all the time. If you take the master class and you don't learn nothing, I give you your money back. I give you your money back. The second way that I can help you, I have a master's degree in business. If you notice, I never talk about my credentials. I never lead any conversation talking about my credentials, because why? What I am and where I've been, the accomplishments that I have, none of that matters, because I can tell y'all that I own 28 companies on paper, and I do. I own 28 companies on paper. I have a master's degree. If you ever board a Royal Caribbean cruise ship, they're going to make you download an app. I spent 1.5 years flying back and forth to Miami, helping build that app. I've written 2 books that became bestsellers internationally. I can go down the list of accolades that I have, but nothing that I have has absolutely nothing to do with you changing your life. So that's why I never lead with who I am or what I have. I lead with providing you the information. I teach business owners twice a month. Twice a month. Twice a month. It's like going to business owners college. It's called Momentum. And I'm going to show you the value of this class, where we teach you what an LLC is. We teach you what profit and loss statements are. We teach you how to automate your business. Our next class, we have a class coming up on, how to open a trust. Like all of the things. We teach you how to sell on Amazon. We teach you, how to fix your credit in real time. We teach you how to use corporate-owned life insurance policies. These are all the classes that we've ever taught. Whenever you join Momentum, it's a monthly training. When you join Momentum, even if you join it today, you get access to every other class that we've ever done. We got nearly 30 classes. To go to our Momentum University, it costs you $100 a month. Momentum is the new business owner college, $100 a month. Even if you can't afford the master class, just by investing $100 a month, the training that you get every single month, you can't go buy nowhere else. And I know that I'm not just talking, because this is where you get, we are a community of people that's helping you grow. It's the same type of community and the same type of business owners that have the same mindset on how to grow. We teach you how to use that Stripe rotation, how to open a Chase account, never have to use your personal information. You can be on Social Security, disability. You can be on child support. You can be in bankruptcy. Any situation you have, we teach you how the corporation can get you up out of that situation. That's Momentum. And for those, and I'm going to be real honest with you all, I showed you all how to go get funding in Stripe. Y'all, I cannot stress enough, and I cannot stress enough. This Stripe loan, again, it is one of the things that I have uncovered. I've uncovered the secret sauce on how to go get funding to put money in your pocket. I know that there are a lot of people teaching you all how to go get funding. I get it. I can only show you my receipts. I can only show you my receipts. And until somebody can show me how they got over $500,000 no credit check, I'm sticking with it. So for those who are needing the funding, I encourage you to join our Legacy Builder program. Whenever you join the Legacy Builder program, I want you to understand the value that you're getting. Whenever you join our Legacy Builder, what we're doing for you is we're either opening you up a new corporation as an operating company, or taking your current company and take your current company and convert it to a corporation. We're going to open you up a parent company, a property management company, and a holding company in Wyoming. We're going to open up a nonprofit, and we're going to fill out your 501c3 application. But we're not just going to open all of this for you. Whenever you enroll in the Legacy Builder, not only are we going to open the companies for you, but we're going to give you access to the masterclass. We're going to write you your first business plan. We're going to give you 2 years worth of monthly training twice a month. 2 years worth of monthly training twice a month. We're going to do your first year's corporate tax returns. We're going to give you registered agent services for a year for all of the companies that's in Wyoming. We're going to give you a commercial lease agreement. In order to take advantage of not paying taxes in Wyoming, you have to be a resident. For your holding company, we're going to give you a commercial lease agreement. We're going to give you all of that. $59.99. If you can't afford to pay the $54.99, it's $59.99 without a nonprofit, $64.99 with the nonprofit. We have payment plans. Now, I want to go ahead and stop you right here. There are some people that say, Dwayne, I just can't afford that. Not a problem. I also have a starter legacy builder, $24.97. And a starter legacy builder with $29.97. The difference between the starter packages and the full version, with the starter package, you don't get tax returns, you don't get the monthly training, and you don't get a commercial lease. With the starter, you do get us opening the companies. We still convert your LLC to a corporation or open you up one. We still give you the master class. We still give you registered agent services, and we still give you a business plan. And even if you can't afford the starter to pay in full, you can start the starter at $625 a month. Yes, you can make payments on the starter. The starter legacy builder without the nonprofit is $625. The starter with the legacy builder, the starter legacy builder with the nonprofit is $750. What does the starter not come with? Let's go see. Let's go look at the difference between the two. I'm glad you asked that. Let's look at the difference between the two. Great question. Great question. Amazing question. Let's go look at the difference. All right. Let's go with the starter and let me show you. With the starter, we open up the companies. We convert your LLC to a corporation, or if you don't need one, we just open it. We give you the master class. We write you your professional business plan. And then, voila, we give you registered agent services. Now, I'm going to show you this. Watch this. What you don't get is the first year's tax returns. You don't get access to the month-to-month training, and you don't get a commercial lease. If you wanted to purchase the starter, I just realized this as I'm talking to you. If you purchase the starter, I just realized while I'm talking to you, you could actually still go purchase the commercial lease separately. I just realized that. Our commercial lease agreement is $350 for the year. I just realized that as I'm actually explaining that to you, the light bulb just went off. Our commercial lease agreements for Wyoming is $350 for the year. Our registered agent services for Wyoming is $49.99 for the year per company. So you could still purchase the starter and add you a commercial lease for $350. Yeah, that's not bad. That's actually not a bad deal. I don't know why I didn't think about that. Oh, that's what it is. So the price difference, when you're thinking about that plus the legacy builder, the starter legacy builder plus the commercial lease, the differences in prices is the month-to-month training and the corporate tax returns. That's where the other bulk of the price is going. Yeah. So it's your call. But my point is there's a way for everybody to start somewhere. There's a way for people to start somewhere. And y'all gonna have to hold on because I just realized the commercial lease should be free in all the packages. Absolutely not. Absolutely not. You know why? Because that employee that I pay that sit in the Wyoming office that I have, they're not free. I have an office in Wyoming, and I have an employee that sits in that office every day. And we pay. I pay lease. I pay rent. I pay rent in Wyoming. I like it. I hear you. And that's just being real. That's just being 100% honest and real. 1 second. I'm trying to plug my phone before it dies, and then we're going to all be. 1 second.